Record. And let me just mute everyone, be on the safe side. All right, guys. Wait, let me mute. There we go. So just gonna review a couple of things about NAS and gold, maybe two other pairs if you suggest any. Let me start with a daily chart. And I think the last call I did, I had these levels outlined or I discussed them. I don't remember, but if I didn't, I'm just gonna do a quick review of why these drawings are here. Trading 2023 started here because the first week is expected to be choppy. We don't want to be trading here. So I started here. If you pretend like you don't see any of this, this is all the information you have. Prices on daily consolidation right here between this low and this high. So I'm going into 2023 with a bearish bias on DXY. All right. Bearish because I think I shared the website I use, the FedWatch tool, CME FedWatch tool. So that was suggesting bearish DXY. So I'm expecting bullish order flow from NASDAQ. If we're looking at bullish order flow, it means the draw on liquidity is going to be higher. So in a consolidation, ICT month one says the arrays that are paired with consolidation is equilibrium. So equilibrium is important. So my draw on liquidity is right here. This right here is the week that we expanded towards here and then higher. So let's talk about what my thought process was before we started expanding higher. If this is equilibrium, everything above here is premium, normal stuff, right? ICT stuff. If we're closing above equilibrium, then I need another draw on liquidity that's higher than equilibrium. If we're not closing above equilibrium, anticipate a lower time frame draw that's lower than at least the daily low that tagged here. So when I looked above my equilibrium, premium array, this imbalance inside here. So that's my draw. This was price getting there. No close above here means I look for bearish arrays or bearish liquidity draw, short term at least. And I shared why I wanted to see 11,200 basically, and these higher lows. We talked about how I fumbled this entry when it didn't close below here. And I was expecting this expansion, so I took a loss inside here. No big deal. We expanded higher. So now we start looking for, if this is expanding higher, where is the draw on liquidity? Most persons have this high outlined, and I kind of shared that. I don't view these highs as liquidity draws or liquidity target because I don't believe stop hunts holds liquidity. If there are failure swings and the liquidity is taken, like this low gets taken here, I don't think this down candle will house liquidity until we start moving away, and then the narrative is being built around and higher lows is being formed and all that good stuff. So at the very least, I'm thinking if we close above this right here, the failure swings that are above this blue line should be the target. So I'm going to take this off for a second. We don't need it anymore. Where's the last time price traded above a daily high above this blue line? This day, we traded above those daily highs, which means daily highs that are lower than the stop hunt should hold liquidity. But we're here and we have this one first and then this one. So those are the draw on liquidity. If we start closing above these, then we start looking for big figure numbers. Since there's no structure inside here, I reference 12,000, 12,250, 12,500 if it continues. But for the next 7 days, I'm expecting the XY weakness. because FOMC is 7 days from now. Tapped here, trading low. So let's assume for a second that when this day closed and we didn't close above this buy side liquidity, you expected lower prices. I only expected a retracement, but let's say you expected lower prices. Where would be the sell side draw that's before this day that we could trade to? Previous daily low, this daily low, imbalance right here, weekly open, which is this candle's open, previous weekly range, normal stuff, right? I'm looking at this candle here as the last area that we could trade to if we're bullish and remain bullish. So I'm looking at this candle's low. Well, open price is a rejection block, which is weird, but because we didn't close here below this daily low, I'm using this as a rejection block. Simple idea. If there's a swing low or a daily low, the liquidity is swept and there's no close below it, I use the bodies for rejection block ideas. Is it wrong? Maybe. Does it work? 100%. There we go. Moving on. So I'm bullish the DXY. Well, what am I talking about? I'm bullish NASDAQ because I'm bearish DXY. So every run lower for me is going to be a potential long-in opportunity. Here is the weekly open price. That's all you need. If you drop to our hourly chart now, let me hide the indicator for a second. Here's your hourly chart. The last time we broke above a daily high or hourly high is here. This imbalance is right there. Closing below that is going to signify a deeper run. I'd rather not see that. But this is the opening price. This is fair value for buying. This is a low. This is that low I was expecting since last Friday. The M15 FVG at 11,587. We're talking about that. It trades down into the weekly opening price, which means my mind starts getting very excited and I see this idea. Let me go green. If you're expecting a bullish week because the draw on liquidity on DXY is lower, it means you're expecting us to expand above that open price. How far? We may or may not know. That's irrelevant. But what we do know is if any day inside this week expands below the weekly open in a bullish narrative, that's going to set up this idea for you. A potential trade from somewhere down here, minimum objective to weekly open, because the bullish week is going to close above here. That's why I held all my NAS trades with no partials, because the weekly open must be traded above. And I want to see expansion. Then I want to see failure swings inside the run down being broken. That's my failure swing. So I'm looking at all of this as a run up, right? So that was the narrative behind why I wanted to long, and you know why DXY is bearish already. So now I go straight to an M5, and on an M5, this is the only M5 view I need to see. I need to see where is my 4 AM open. I need to see where is my 10 AM open, and then time. Everything else is irrelevant. I start trading at 8. We drop down inside here. I tried to go long in here, got cooked. Tried to go long again, got cooked. So I waited. Then this happened. Then 11,604 here, I got the first confirmation that we're likely to trade higher, which is this fair value gap right here being filled. And this fair value gap is filled. I am now thinking this low right here was the draw on liquidity. That's what I was thinking. Because this is, I don't want to say true day, But this is where the bulk of all the arrays that I use need to get formed for me to consider them relevant. Which means, show you a little bit of a trick when I take off all the drawings.
I think you cut out a little bit.
Oh, can you hear me?
Yeah, I can now.
Oh, my bad. Not sure. So the bulk of my arrays, order blocks, FEGs, whatever, need to get formed inside here after 8 o'clock. So if price is trading lower and there's that low, and whichever one of these is lowest, and those lows, my mind is going to default to looking at this. Which means if I'm looking for an order block, I want it to form here. Which means as good as this entry is likely to be, I'm going to use this as confirmation instead of entry. And I don't know if this is lower. All right, there we go. So those two levels. This candle right here is going to be my order block. That's my plan. My plan is I want to go long here. This down here is confirmation. So when we start trading above this candle's high, I'm thinking the state of delivery should be changing now, which happens right here. So at this point in time, when we traded above this, even before the candle closed, I'm bullish, very much bullish. And I'm looking at all the narrative being built around this candle. Once I got it, I'm thinking this high is the next draw. This is the next mile marker. Well, in reality, it would be this FEG. This FEG is a mile marker. Once we start going above that, I'm very much excited and I want to go long. I went long at 11,604 inside here on this retracement, anticipating that this delivery is sell side, buy side, then nothing but chop up and down. I'm not expecting this FEG to get traded to. This is not inefficient. We had price being delivered inside that range multiple times. So if you go as far as to do this, bam, bam, bam. I'm looking at the delivery through this perspective. Nothing below here is inefficient. We don't need to go down there. I need to pay attention to this portion of price, which is just the range of this candle here. When this candle dropped, that's all sell side. This wick came up, efficient, lots of chopping inside here, thin volume, but sell side was already offered. When this candle closes, there's nothing else I need. This right now becomes essentially a brick wall. Well, not drawn properly. That now becomes a brick wall for me. So this is going to be my market structure shift. Once we do this, I'm buying retracements. And my target is 4 AM open price and higher. This run, I took partial because imbalance inside here, we could see some amount of resistance. That happened, higher prices, life is good. So everything I was doing today was built around this logic. DXY is heavily bearish. I think it's drawn to the monthly FEG. In a bullish market, my favorite ICT quote says, opportunities are born from a change in the state of delivery. In bullish markets, you want to buy dips. In bearish markets, you want to sell rallies. So I'm in a bullish market. We're dropping lower. I'm interested in that. Clear this up. And that's my core reason for going long here. Type 2, indeed. On gold, pretty much the same idea. The only difference with gold is gold went lower first. When gold went lower, I think I was actually long inside here a couple of times. Minor stops. Then we ran higher. I had some amount of what do you call it now? restraint from this guy going long, because when we were right here, I didn't want to see price trading above here at this time. At this time right here, I didn't want to see price above here because that's not usually a very bullish signature. So I'm looking at, I'm going to buy dips, but I'm going to buy them with lower leverage. So I got in here on my first trade, and it's same thing before 8 o'clock. Lows being swept, down candle, trade above, buy inside this wick, 1923 something, and then let it run. I took off 2 positions here when we traded below this candle's low because of the time. 8 a.m., not 8 a.m., 10 a.m. open, we're expanding higher. This could be creating an order block to go lower. I don't know, but I'm seeing that these highs right here are being taken, then we are rejecting. So I'm entertaining the idea that this is a potential bearish scenario. 4 a.m. open gave me confidence. We're not closing below 4 a.m. open. Clearly not bearish. There's no expansion on the downside. So this is technical distortion. You could wipe it off your chart like this, and it won't matter. The delivery won't matter. It will still be price trading down to 4 a.m., finding support ideas and running higher. Bam, bam, bam. And that's for gold. So I think I talked about the drawn liquidity for gold maybe on the last call that we did. It should still be the same if I go to a daily chart. Easiest way to do it, put a horizontal line on Monday's open. Look for your bullish or your buy side liquidity above it. Nice and easy, no 1 million range. This FEG being filled is the first one. Then if we take a look here, the last time we traded through a daily high was all the way up here through these highs. This is the drawn liquidity, and this is my drawn liquidity. As a matter of fact, you could tag every single high and then watch if we close above them, anticipate higher prices. But that's the easy and simplistic way to look at it. Can you go over open lines 4 and 12? 4 and 12. Not sure what you're asking. So if those are your bullish draw on liquidity and prices opening and dropping down, again, below the opening price right here is telling me that if I go long anywhere below 1126, I'm very likely to get a trade that's expanding above here. If the day is bullish and the daily open is all the way up here, and you get that entry all the way down here, you could play a really, really, really nice trade. But now you could see that the drawn liquidity that we have from all the way over here, we have price closing above it. So on M5, it's just the same thing over and over again. We don't look at every single high. We look at ATM open, find your order blocks, just watch them get formed inside here. They're generally formed inside here. The only time you don't get your order block forming just after 8 o'clock, between 8 o'clock and 9:30, is if there's a run on liquidity before 8 o'clock. If there's a run on liquidity, you don't need another order block. You just need to reference the order block that's right there, in my opinion. This is AU. AU was clean. Same idea. It's been drawn to 4 a.m. open. 4 a.m. open right here. 8 o'clock right here. We run lower. Close below here. That's my order block. Do nothing until price gets above here. So the delivery here was choppy. May or may not would have been stopped out. But then again, just watch the 10 a.m. open and I'd buy every time we close above it. Close above here, I'm looking for longs here. Close above here, I'm looking for longs here. And the drawn liquidity is clear. What is the significance of 10 a.m. open time? London close. There you go. London close, profit taking. London close, profit taking happens. If profit taking happens at 10 a.m., you're likely to see a very nice macro taking place, right? Very nice macro. That was a joke for anybody who got it. But yeah, generally what happens at 10 a.m. is that they're taking profit. So what you want to do is you want to look at what kind of orders are in the market. What kind of orders are in the market? Then you watch what happens at 10 o'clock. Am I getting a continuation at 10 o'clock? Is it creating a reversal setup at 10 o'clock? That's it. That's all you have to look for. You don't have to trade anything before 10 o'clock. You could allow everything up to 10 o'clock to create the structure and then tell you what you want to do. Then you start to say, if 10 o'clock is removing, for instance, short orders out of the market, what does that look like? If short orders are coming out, bullish orders are coming in. So price is going below a low, creating a bullish order block. Or we're running down into a discount array at 10 o'clock. And you watch that, you go long, you look for the highs, housing liquidity. Game over. Game over. What macro? It's called the offset macro. There you go. So every day at 10 o'clock, something you could feel free to study. At 10 o'clock, are we running below previously established lows? Yes, which candle is closing below the low? This one. Okay, cool. When we trade above this, I go long. It doesn't trade above it down here, so you don't go long down here. Trade above it here, you go long here. And that could be the only thing you trade every single day. You don't have to look at all of this. You don't have to front run the news. Just wait for 10 o'clock. Watch if they're taking profit. If they're not taking profit, meaning if this candle is not validated as an order block, then lower prices. We don't close below it, look for retracements and then short. Like that alone can be an entire trading plan. And all you have to do is just look for a model, a fractal. But that timing element there can save you a lot of things. And then just focus on low-hanging objectives. What is this? US 500. Yes, everybody's favorite pair. 10 o'clock, right here. Are we going below lows? I don't see any down candles going below any lows, so I'm not going to buy at 10 o'clock. We're trading higher, we're going above down candles high. But is this an order block? Nope. I don't see this as an order block. This would be an order block because it's the one that closes below here. We didn't trade above this high, so I'm not buying this. This down candle is below here. So when we take this high, I'll buy. Let's say this happened too fast because you wanted a lower price. Order block, down candle, well, let me say bullish order block, down candle taps it, we trade above that high, this is a buy. That sounds like a rhyme. So you go along here. I know Hassan probably laughing at my joke, so I don't have to say tough crowd. Where's forum open? But this like this alone, or you could even look at this like a market maker model. I think I saw Phantom. I don't know. I think it's called Phantom ICT or Phantom something or Phantom Trader. He mentioned that using 4 AM and 10 AM, you could frame market maker models. So if that's cool with you, when is the smart money reversal likely to happen? Back test. Back test how many times a market maker model gets formed like this, or a market maker buy model or sell model. Where is the smart money reversal? Is it at 10 o'clock or before 10 o'clock? If it happens before 10 o'clock, you're going to get a time distortion. If it happens after 10 o'clock, you milk it. There you go. Another little nugget. Yeah, I'm going to upload to YouTube. More than likely. Yeah. What's this? UCAD. If DXY is trading lower, then UCAD is bearish. Nice and easy. If UK is bearish, where is the drawn liquidity? Lower. This is news. News pumped it up high. If I was looking to buy at 10 o'clock, I'd see these lows, not this down candle, but this one, which means when this candle here validates this guy's an order block, you'd buy here. But this is news. So you'd have to decide, am I willing to take that risk with the news or not? And there you go. Less guessing, less are we bullish or are we bearish, but more at 10 o'clock, I start looking for where's my liquidity. And then, so this is EU. 8 o'clock, 4M open. We have longs coming in the market. Why is longs coming in the market? Because we traded down before 8 o'clock and I'm seeing that price is taking out lows. So I could be a stickler for precision and say, here's a low that was taken out. Where's the candle that closes below that low? Here. Yep. Look to go long when price trades above that. If you go long here, you're gonna get stopped out. Normal. I don't trade inside here because London is not the best time to trade. Just before 8, we have another down candle that pushes price higher. Potential propulsion book. Potential, right? I buy here. Where's your drawn liquidity? I don't know where EU's drawn liquidity is right now. I don't know. I don't know if it's previous day high. I don't know. But yeah, if you're trading that, that's what it could have been. Maybe you missed all of this because you didn't trust it. You have 4M open. See that we're closing above 4M open. Down candle, close above it. You go long here, stops. Wherever is your drawn liquidity? You miss this. You see that the market's bullish. 10 a.m. is expanding higher. You're not sure if you should go short or you should go long. Stay out. Longs are in the market. If they get taken out, I don't want to go long. I'm looking to go short. But if DXY is bearish and this is likely to trade higher, I don't mind putting risk on here. And if I get stopped out, then okay, I got stopped out following my plan. Long here, take out this high, not the highest one. This one right here, because this is the one after the stop one. And then look for that. Every pair, same idea. UJ is bearish, so I'm looking for shorts at 8. At 8, we trade up. Do I have a bearish order block? Well, we just traded above this candle's high. This is the candle that closed above it. Well, it didn't even close above it. So rejection block. Whenever I see this, if it can't close above this, I'm thinking a rejection block. So I'm looking at the bodies. I want my entry right there. Maybe I'd go short here. And this is my entry. If I had 10 a.m. open on my chart, I'd see that solid close below 10 a.m. FVG at 10 a.m. I'm going to give this a shot. Calculated risk. Entry here, stops above this candle high or this swing high, and look for an expansion below here. That's not guessing, that's not chasing it. That's using the same logic every day. Where's that? Down. What's this? This is GU. This is from the last one-on-one that I did. Don't think that he's on the call, but we're looking at this setup right here. And the potential I was going to run here. So it's been slowly moving higher. I think that's the last pair. This is GJ. Same idea on GJ. 8 a.m. right here. We're trading higher. We were taking stops before 8 a.m. Find your order block. This is the low. This is the order block. Pull that out. Wait for your entry after 8 a.m. There you go. Where's your drawn liquidity? I don't know. You could target 4M open. Look for a high created before 4M open. So you're bullish. At 10 a.m. we open and we drop lower. You're bullish. This looks like maybe OTE. Be willing to put the risk on here. Put your stop here. So you don't have to get the first one. It's always nice to get the first one. We're going to use the first one to confirm what you want to see. Want to see a down candle get formed inside your POI or breaker or anything you want to call it. Then you want to see price go above it. When it comes back down, I'm willing to buy here, put my stop here, and then trade for this high. This trade might just be a good RR trade, But if it's not a good pip count that you could reasonably make some money off, then it's a good trade I can see, but it's not a good trade I want to take. Not every good setup is worth taking. Maybe the stop on this was wider. So even though you could see that just like the trade higher, you're not interested in that. Maybe the objective is just 5 pips. I don't want a good setup because it's 5 pips. Not on an M5. M1, probably, but not on an M5. And not on a pair like GJ with wide spreads. We identify the continuation model at 10 o'clock. Look if there's a smart money reversal. But yeah, not the review that maybe you were expecting, but this is what FTSE med. I think this is here because of med, but same idea. Shorts are in the market because we're trading low. I'm not going to assume that this is bullish unless I see an order block get formed. So if this is my order block because it's trading below this low, I don't buy until this high gets taken. No buys. Here's a low. This is the down candle that closes below here. We trade above this. Nope. Maybe here without taking a buy and taking a loss. Okay, cool. This low gets taken out again. Down candle. We trade above. That's a long again. I'm willing to take that. Calculated risk. Not just buy because we still have margin, right? Calculated risks. Nas for life, Nas for life, Nas for life. So, hopefully that kind of helps. I guess as far as how I trade, the only thing that a lot of persons are still asking about is why 4 a.m. Why 4 a.m. Why 4 a.m. 4 a.m. because 4 a.m. is the start of the day. There you go. So hopefully you're able to blend whatever fractal you want around these times, and then you can start talking. But I'm not going to, I'm going to try to do as best as I can to point to some stuff, but in the end, guys, back test, see if it works with your model. If it doesn't, then okay, cool. Continue what you're doing. If it works, then just manage the risk. Just do what you're doing. We don't need to add anything else. And if you already had anything else added, I guess, I don't think that Sean is here. That is Sean. Only Sean does that. But yeah, just keep it real. Don't overthink it. You don't know exactly why 4 a.m. yet. So, but you don't need to follow it blindly. You back test it, you see it works. That's all you need. Nicholas, no, I'm gonna put it on YouTube, not CM things to know. Not CM things to know. But yeah, I have some EA stuff to go review now. I know Sean is gonna slide in my DMs when I say that. But enjoy the rest of your day. I will talk in the group. All right. Bye-bye.